Hello, everyone. So today is RBI Policy Day. So we will look at the pre-market analysis of 6th of December 2024, and it's a RBI Policy Day, and it's Sensex expiry also. So if you see, yesterday's session was nothing less than a tug of war between proprietary traders and the FIIs. In fact, it was reflected in the intense volatility and the strategic moves that you can see. There is a down move, then there is a sharp recovery, and then again there is a sharp dip, and then again there is a recovery. So today, with the RBI policy decision, which is coming at around 10 o'clock, and other key global economic indicators are also on focus, so it could be a very interesting day today. So let's try to break it down step by step. Okay. So let's start with yesterday. Yesterday, if you see, Nifty have showcased extreme volatility. In the morning, there was profit booking, and that dragged the index below 24,300. And everyone was expecting that it is going to go down because it was breaking that lower level, breakdown level. And then most of the traders got trapped in the short trades. But then there was a sharp recovery. By noon, again, it witnessed around sharp 350-point rally within just 15 minutes, then again likely driven by the proprietary traders. So again, FII stepped in during afternoon. They pushed the index down by 250 points. So despite this, again, proprietary traders managed to stabilize Nifty to above 24,700 by market close. So you see, this dynamic reflects the clear battle between opposing market forces, with both sides attempting to gain the upper hand. So now it's between FIIs and the proprietary traders. Let's also look at the impact of macro events. See, at noon yesterday, the statement from Japan's largest investment bank, Nomura, actually added fuel to the market rally, and the bank predicted a 25 basis point rate cut by RBI. So this led to speculation that some of the optimism has already been priced in. And if RBI announces the expected rate cut today, we may see limited market movement because it's already factored in. But again, let me tell you, the chances of rate cut is higher because if you see the growth, the GDP numbers which have come before, it was less than even the forecast. So that is actually a worrying sign. So RBI have no other option but to go with the rate cut. And since it's already factored in yesterday, the chances of bigger move today is very less. So a surprise decision like again maintaining rate cuts could lead to a significant market shift. If they maintain the rates, then there is no chance that they will they will increase the rate. But if they maintain, chances that the market will fall will be high, because yesterday's move is actually with the anticipation that the market or the rate cut will be there. So if there is no rate cut and if they maintain it, then it is going to be difficult. So as a trader, you need to be very alert to RBI governor's press conference today. So again, if you're attending the live sessions, I'll be providing the insights about that with respect to inflation, with respect to GDP, with respect to the broader economy he talks. So he normally start with broader economy, then he come to GDP, then he come to inflation, then he will say inflation is stabilized. Now we need to focus on growth so that we can go for a 0.25 basis point cut. Then there can be a positivism, but it's already factored in yesterday. So don't think that too much of upside rally will be there. The potential for negative move is very high in case if they won't go for a rate cut and maintain the rate. Think about that. Okay. Now coming to FIIs and proprietary traders, let's look at the open interest analysis. So if you look at the open interest data, as you can see in the screen, FIIs have increased long position by 21% and reduced the short position by 4%, which is actually signaling short covering here. When it comes to the proprietary traders, they reduced both long and short positions and contributing to an overall decrease in open interest by around 3%. And this actually indicate a mixed sentiment with FIIs learning, or FIIs is going towards, now there is a kind of bullish move. At the same time, proprietary traders, if you see, they are looking very cautious. That's what you can understand from the open interest analysis. And in the options market, FIIs have been aggressively buying put options. That's a move that raises questions about their strategy. And meanwhile, if you see, proprietary traders are again betting on the upward market movement because the market already corrected 10%. So they are now looking for a good support from here. So the divergence actually highlight the ongoing clash between the two big market powerhouses. Let's look at the global market indications, global cues. Okay. So the US market, if you see, witnessed profit booking ahead of critical unemployment data. The Dow, the S&P 500, and the Nasdaq closed with minor losses. And the Fed rate monitoring tool suggests a 90% likelihood of rate cut in the upcoming Federal Reserve meeting. That is again adding to global market uncertainty. In fact, if it happens, it is positive only. And if you look at the Indian ADRs rallied. That is reflecting again positivity with ICICI Bank ADR gaining over 3%, and the early indicators actually suggest a gap up opening for Indian market, because the ADR will give you a clue about the gap up, gap down, right? With Gift Nifty is already trading a premium of 70 points, which is again indicating a gap up opening today. If you look at the technical levels of Nifty, so you can see daily chart. Nifty formed a bullish candlestick pattern with a long lower shadow. That is indicating buying interest at lower levels from the support. And if you look at the immediate support, which is at 24,700, if 24,700 breaks, then the next level will be 24,500. And if that again break, next level will be 24,350. So these are the three levels that you need to focus on. If you look at the resistance, which is initially the breakout level will be 24,850 to 24,900 level. If that breaks, 25,000, where there is a huge open interest is there. So indicators like RSI or MACD, maintain an upward bias actually at this point of time. The momentum is showing upward, and that's again suggesting uptrend could continue if Nifty holds above 24,700. So my point is, as long as Nifty is staying above 24,700, it is better to look for a buy on dip. Let's go with the Bank Nifty. So if you see, Bank Nifty also show similar to Nifty movement, but slightly again underperformed. Previously, Bank Nifty was doing good, Nifty was underperforming, but yesterday it was opposite. So it closed at around 53,600, forming a bullish candlestick pattern again with a higher high and higher low, which you can see on the daily chart. So if you look at the critical level, which is again 53,060 and 52,790 are the support levels. So first support, which is coming at 53,050 levels, and then if that breaks, 52,800 level. Now if you look at the resistance, which is coming at around 53,880, and the target could be 54,000 if that breaks, and then 54,200 if you're getting a breakout. And Bank Nifty again, today it will be very sensitive to RBI policy decision. So you need to be very clear about the policy announcement, what governors speak and everything, and you can consider joining the live session also. So if you look at the options data highlights, if you look at the call open interest, it is maximum at 25,000, again followed by 24,900, 24,800. These are the levels where you see maximum call open interest. And the other side, if you look at the put open interest, 24,700, 24,800, 24,600 levels are there. So what does that suggest? It basically suggests the broad trading range will be 24,500 to 25,000, and a straddle at 24,700 with a hedge of 24,200 and or 23,800 or 24,000 and 25,300 will be better. It will do good if you are executing a monthly strategy. So guys, as we head into today's trading session, the market is going to give you significant movement. It could be influenced by RBI policy decision and of course the global cues as well. So as traders, you should remain cautious and stick to your plan. So keep your position size small and expect the volatility. So focus on the critical support and resistance level that we have discussed, and always try to maintain a stop loss and avoid over trading. Remember, discipline and preparation are the keys to navigating such markets successfully. Okay. So if you find those videos successful, don't forget to share, like the video. So thank you so much. See you in the next session.